Welcome to Frost and Sullivan's Growth Podcast. In each episode, we are taking a deeper look at transformative shifts shaping global ecosystems, from industry megatrends and technology innovation to evolving customer expectations. Today, we are exploring the top growth opportunities in the global robotaxi industry, unpacking where the next wave of opportunities is unfolding and what it means for future-ready businesses. The robotaxi industry in 2026 is moving well beyond pilot programs and into commercial operations. And this podcast is diving into how OEMs, autonomous technology providers, and ride-hailing platforms are reimagining what mobility looks like, how it is being delivered, and how it is generating long-term, software-driven revenue. We will be covering the transformation taking place across software-defined vehicle architectures, autonomous fleet models, OEM repositioning strategies, and the platform ecosystems powering it all. So stay tuned. Think about how the role of an OEM is changing. It is no longer just about engineering a vehicle and handing it off to a dealer. It is about building the intelligence that drives the vehicle, owning the software stack that monetizes it, and positioning the manufacturer as a platform provider, not just an assembler. For decades, the automotive industry was revolving around one-time vehicle sales and hardware differentiation. Today, that model is being disrupted from within. The robotaxi segment is commercializing faster than most predicted, and OEMs are now deciding whether to evolve into autonomy-enabled platform providers or risk being sidelined in the new world of driverless, software-defined mobility. The three big forces driving this shift are software-defined vehicle, SDV, architectures, which are reshaping how automakers design, develop, and monetize next-generation autonomous platforms, AI and chip partnerships, which are redefining Level 4 capability development and blurring the line between technology companies and vehicle manufacturers, platform as a service, PaaS models, which are decoupling revenue from one-time vehicle sales and building recurring subscription-driven income streams across the fleet lifecycle. Is your organization positioning itself to capture autonomy-driven platform value? Let's zoom into what is actually shifting across global markets right now. What began as cautious pilot programs is now transitioning into commercial passenger operations across major urban regions. Companies like Waymo, Baidu, WeRide, and Tesla are generating real revenue and real disruption in cities across the US, China, and Europe. Ride-hailing platforms, including Uber, are no longer waiting on the sidelines. They are actively integrating self-driving technology into their core business models before robotaxi operators erode their market share any further. OEMs like Volkswagen, Hyundai, and Toyota are building autonomy-ready platforms to supply these operators at scale. They are functioning less like traditional manufacturers and more like critical infrastructure providers, supplying the entire autonomy-ready ecosystem that fleet operators depend on to run scalable, driverless services. Meanwhile, the global self-driving technology for ride-hailing industry is tracking toward a valuation of USD 177.75 billion by 2035, reflecting how quickly investor confidence and commercial momentum are converging. Is your organization paying close enough attention to how fast the competitive ground is shifting beneath traditional mobility models? Three imperatives are standing out clearly. First, disruptive technologies are accelerating at speed. Advancements in AI, new electronic architectures, and modular autonomous systems are changing how automakers are designing next-generation SDVs. The line between technology company-built robotaxis and OEM-produced Level 4 vehicles is blurring fast, and manufacturers are responding by standing up dedicated internal autonomy teams and AI development programs. Second, competitive intensity is compressing timelines and profit windows. Robotaxi technology has matured past the threshold of operational viability and is now actively eroding traditional ride-hailing revenue share. Incumbent ride-hailing players, AV developers, and OEMs are competing for the same ground and forming global partnerships to move faster than individual development cycles allow. Third, industry convergence is opening entirely new revenue models. The transition from human drivers to autonomous vehicles is dismantling legacy fare structures and creating space for scalable premium offerings, including subscription services, fleet as a service, and urban logistics integration with smart city ecosystems. Is your long-term growth strategy resilient enough to handle these pressures while building a sustainable autonomous mobility pipeline? Not every vehicle rolling off an OEM's assembly line needs to be Level 4 capable, and that reality is dictating where development budgets are going. Because L4 autonomy integration is only relevant for a slice of any manufacturer's model range, many programs are being scaled back, deferred, or restructured. The economics of dedicated autonomous manufacturing lines simply are not stacking up until fleet scale reaches a meaningful threshold. The challenges stacking up across the industry include high L4 platform development costs demanding entirely new vehicle architectures. Most OEM platforms are still years away from being genuinely L4 ready. Purpose-built robotaxis lacking steering wheels or pedals, making them entirely unusable for traditional consumers or private resale. Low utilization rates, making it difficult for OEMs to justify large resource commitments to dedicated robotaxi programs. Substantial financial overhead from upfront capital costs, combined with ongoing human resources required for testing, validation, and maintenance. Public trust risks compounding the picture. Incidents on public roads are eroding confidence rapidly and triggering costly operational pauses. Which best practices will help your teams overcome these financial, operational, and reputational challenges in this fast-moving industry? 1. Building in-house autonomous capability teams. OEMs are strategically shifting toward in-house development of vehicle operating systems, driverless logic, and AI to reduce long-term supplier dependency and maintain control over user experience and proprietary data. By establishing dedicated internal autonomy and simulation teams, manufacturers are controlling development speed, ensuring safety integration across SDV programs, and piloting new revenue streams like robotaxi as a service and urban data analytics. 2. ODM models for robotaxi platforms. Automakers are increasingly functioning as original design manufacturers, ODMs, constructing Level 4 robotaxi vehicles while technology providers and fleet operators are determining the autonomy stack and system architecture. OEMs are focusing on what they do best, engineering and building vehicles at scale. They are then teaming with autonomy specialists to launch dedicated robotaxi manufacturing arms, ensuring self-driving technology fits cleanly into the production line. Scaling, platform as a service, PaaS, revenue models. The emergence of PaaS models is cementing OEMs' transition from assemblers to essential infrastructure providers. Strategically investing in SDV monetization is allowing companies to trade one-time vehicle sales for ongoing income from subscriptions, fleet management services, and autonomous mobility data, building lasting recurring revenue streams across the vehicle lifecycle. Thanks for joining us on Frost & Sullivan's Growth Podcast. For access to our research, competitive benchmarking, and best practice frameworks, head over to frost.com or email us at hello@frost.com. We'll be back soon with more to help you stay clear-headed and growth-ready.